Okay. Testing, testing, testing. Are we live? I believe we are. Let's get some charts loaded up for today. Welcome, guys. Welcome. Great to see you. Today I've got my flask rather than a mug. I've been out this morning to a horse yard to sort a few things out there and help a family member. Flask's very handy if you live in Britain because it's freezing cold a lot of the time. And yeah, so that's where I've been out. I'm starting this stream a little bit earlier than I normally would. If you're watching on YouTube, TradingView, wherever it is, don't forget to like, share, comment, and subscribe. I'm posting all the time. I teach people around the world. I'm a multi-asset day trader myself with a very high hit rate. So if this helps you, please do press the like and comment on YouTube. And if you're on TradingView, don't forget to press the like here. It's right there. Comment in the chat box. My free training, wherever you're watching, is under the video or under the stream. https://bit.ly/willsbpa. Tons and tons of free training. Go in my Discord. There's absolutely loads of videos, all for free, and they'll probably help you a lot. So, yeah, I'm going to put the stream on one side, and I'm going to load up some charts. We'll probably start on gold. Gold is my favorite chart today. There's so much we can look at and so much we can talk about, and there's so much to plan at this point because, unfortunately, you've got a lot of things going on in the world, in the Middle East. You know, we've had things like this before, but at this point, the sentiment around it, you know, unfortunately, like I said, it's changing drastically. Gold just happens to be an asset that is heavily affected. So that's why I'm going to cover gold first. I wouldn't normally, but in this instance, I think there's a lot of people trading it, and there's a lot of people who are going to get horribly burnt trading it if they do not manage their risk appropriately and understand the long-term market. So you can see if you pop onto your 4 hour on gold, you can see right over at the 6th of October when this began. Okay, you know, when you had terrorist attacks in the Middle East. You've come from the 6th of October, and the market has come right up to the 20th of October. Okay, so all the way up here since the start to now. Now, of course, that's 17 days, and you know it's pretty steep. It's a really, really steep up move, and the reason why is because people are flocking to this asset due to what's going on. The sentiment behind this asset, therefore, is positive to the upside. That's why you've got a stochastic oscillator that's low, okay, and one that brings you right up here. Okay, this move from left to right demonstrates clearly really, really harsh and steep and fast up move. Okay, the up move is about 1810 all the way to coming on to $2,000. The high is actually 1997. So we did call it long here anyway for technical bias. It wasn't so much to do with the news. That is where we looked long because, of course, you had key price action levels such as these to the left-hand side. So it was a complete technical bias we took that on. Because we know ultimately markets are going to flip and change the way they end up moving after a while. Okay, so again, if you zoom out slightly more, you can actually see that this level is a recurring area, right? So that's why we looked long here, because there's previous rejection at the same point for a sustained period of time, and therefore it naturally puts our probability of success up. Okay, so you can see that all the way across from left to right. If you're just coming in, welcome, nice to see you. Don't forget to like, ask a question, and grab my free training underneath the stream. Join our Discord too. So yeah, we look long on a technical bias. You've now got a feeding strong market sentiment in regards to what's happening in the world. That is why the price isn't falling. If you're shorting this and you're expecting a mammoth fall today, okay, you're running a risky game. I wouldn't buy it. It definitely is not a buy. Yes, the market sentiment's pulling it up, but you are too late to buy because after moves like this, normally, or a lot of the time, ultimately you will fall. That's not happening yet because the sentiment is strong. So what you really need to do is a couple of things, in my opinion. I would firstly drop your size. So whatever size you were normally trading, you can naturally manage your risk by dropping the size, because obviously the market isn't suited to normal conditions, because you've got a abnormal variable, if you like. You're putting something in the mix that isn't normally happening. So you need to drop your size as number one. And number two, I would make sporadic entries. And what I mean by that is, you can't afford to bunch your shorts up. You can't put a short here, okay, and a short there, and a short there, and just keep shorting in like this. That's not going to work. Again, the abnormal variable that's been fed into the market means you need to really, really space things out, because you need a wider net. You need to cast a wider net, because it's more probable that if you do get an extreme market swing to the upside, that's what you're going to experience. So those two things are what will really allow any trader to naturally manage their risk in a better format. Obviously, my trading rules have far more to it than just those 2 bullet points, okay? It's a very basic perspective, don't get me wrong, but simply that's what that does, okay? Now, for anyone who is saying to me, well, it's gone up and up and up. Yes, it has. But if you look over here, the exact same move practically occurs. Only this time it comes back. You haven't had your fall yet, or not a large fall, but just don't pretend that this time it's not going to happen, okay? Because ultimately, the higher you get, the more likely it is people are going to short the market, and that's when it crashes down. So, therefore, if you bought here, great, well done. If you bought there, okay, fine. But if you're now buying here, yes, you might go higher and you might make money. You might go again and make money, but in the long run, that won't happen. It might happen this time because you've got a war going on, okay? But when there isn't a war going on, which is most of the time, you're not going to get that. So that's all I would say. It's much better to buy low, sell high. Okay, that's all we have done, and well, myself, I'm always profitable throughout the year. The members are too. But if you're buying late, you're just waiting for something like this to happen. Okay, um, or like that, because ultimately that is going to happen. The further up it goes, the more the fall normally will be. The bigger they are, the harder they fall. That has been a consistency throughout history. Okay, so there's no point in pretending now that's not the case. And even so, if you go out to buy a car tomorrow, you won't do it at a high price, would you? But you'll do it on gold. It just doesn't make sense. Okay, imagine this is a new car you want to buy. That's the price of it today. That's the price of it last week when you could have bought it. Where would you do it? You'd probably do it here, wouldn't you? But some people are buying up here for some reason. Okay, like I said, I'm not saying it won't go up. I think there's a good chance it will, because of the market sentiment at the moment. It's pushing the price up. I'm not saying that won't happen, but I'm saying over 100 years trading, I would far rather sell here than buy, because it's not always going to be like this, and I'm just running a risk. What if there's news later that says peace deal agreed, and then it just flattens down? You don't know. Someone's asked what you mean by sporadic entries. Sporadic means placed out really wide, very infrequent, right? Hit like this, short and then short again, rather than short and short and short all in the same area. Okay, that would be unsporadic, if you like, and your risk naturally is higher because your positions have a lesser average between them. Naturally your risk will go up, because when the price moves away, your drawdown is going to increase at an extremely rapid rate. Whereas you could not do that and naturally lower your risk, because obviously you're going to have lesser positions in the market together. I hope that makes sense. Of course, if it doesn't, just ask me. If you are just coming in, don't forget to press a like. Ask me a question like that person just has. Thank you for that. And on top of that, get my free training underneath, join the Discord, and make a change. So that is gold. And silver, I run the same bias more or less. I think silver as well, like gold, I think you'll trickle higher, and I think you'll probably have better shorts on silver at about $24. $24. You've got it higher as well, maybe entry one, entry two. Any metals, precious metals, gold, things like that, I would just be very careful trading because of what's going on. Now, with the euro dollar, you are now seeing a bit of strength to the upside. I did say, well, we bought it before on the way down, but I said at this point, you know, I'd probably rather not. And this is an example of when my bias changes. Okay, and this is why I need to change based on sentiment. Because the market sentiment has changed, I am now changing. So what I mean by that is this is pushing up a lot more harshly than you would think. There's quite a good lot of resistance at this point, so I'll probably hold off shorting until there. I won't short early because I know the price is rallying a lot. I know the situation around the world is different. Now, the reason why it's fine that I didn't buy, even though the price has gone up, is because I'm not trading just this asset. If I miss the entry, I miss the entry. It's not the end of the world. I can trade all of these other things I've got on the right-hand side of my screen, whether it be an index market, whether it be oil, it just does not matter. Okay, just if you miss a trade, just don't worry about it because there's so many other things you can trade. That's why I naturally diversify. The only instance where it might be an issue is if you're just trading that asset alone. Okay, in which case you can make an exception, but naturally diversifying drops your inherent risk. So I'm just going to go back to that euro chart for my FX analysis, if you like, of this video stream, educational video, whatever you want to call it. Nonetheless, low stochastic, rejection over here comes in line more or less with things like this area of price action. You are coming up. I wouldn't be surprised if you get just above this previous candle wick first. And any further retracement either wouldn't entirely shock me. If you're going to short it, I would spread your shorts out. I probably wouldn't get in here short until you get over to this point, unless you're hedging with my methods, in which case you'll know what I mean. If you don't know what I mean, you'll have to send me a private message on Discord if you have got my mentoring monthly bonus or subscription if you paid for it. So you can see the reason for that is early resistance there, your first key moving average, and semi-light price action. I would probably suspect if market sentiment changes further, it affects gold heavily and your FX pairs change in value as well. So I wouldn't buy or sell the euro dollar at the moment. I would hold off it because I don't think you're quite there yet in terms of entry. Just like I said for the long side, it has gone up, yes. And okay, we didn't get that entry, but we did get entries the whole way down to the short side and some to the long. Pound looks less convincing at this point. Again, I wouldn't bother entering it unless you're hedge shorting because you're early MAs, and it's only if absolutely necessary you should do that. Okay, otherwise I would just let it run. It may go in line with the euro dollar, but I'm really not interested unless you can get back up here, probably in line with this level of key early resistance and similarly with this level where you fell before. What is my view on the yen sentiment? I'll get to the yens. Thanks for that question. That's a really good one. Thanks. I will get onto the yens. I've just done the euro and the pound. I'm going to do the indexes and then we'll look at the yens. So indexes across the board. I've called these for a while. I'm DCA longing the Footsie. I like it long again. Got orders about here, I believe. Had orders all the way down. We did, of course, short it. Many of you who followed me in the last 10 days will have shorted this way down and you would have profits. I'm now looking long and I'm doing it within the repeated market. Everyone who follows me and watches me knows I am a man of price action. There is no way that you can say if you longed at all the points I've just highlighted, you wouldn't have made money. It's not true, okay? Look, long and it flies away. Long and it flies away. Long, long. So when it comes back, what are you going to do? You're going to sell? I don't think so. I certainly wouldn't. Again, I would drop your size and I would be careful because of market sentiment. You know, if there is a war, indexes will get affected, people panic. So don't be one of those people I would just make your entries normal size. I do suspect that eventually this will break and it will fall. But like I said, it's still a long. It doesn't make a difference. That is still a long. Now, if you're someone who is a breakout trader, okay, I'm going to teach you a lesson now because obviously, I mean, if you follow me, you'll know I don't do breakouts. Okay, I'll tell you why. So this is your support, right? Now, some might say that a breakout would entail the price coming under these lows, okay? It breaks out to the downside, if you like. And what they would do is they would say, you know what? I'm going to take a trend line like this, okay? And I'm going to take a bottom line, which we've got here, which you can see, but I will just draw it as a rough trend line. Let me just get rid of this. I'll draw it as a rough trend line like that. People would call this like a falling wedge or something like that. Now they've got all sorts of names just based on what they look like. So you've got your downtrend and then you've got your floor here, which is your support. Now, a lot of people would say, I'm only going to sell if it comes down here, and I'm only going to buy if it comes up here. Now let me show you the problem with that, okay? Actually, I tell you what, anyone who's watching, if you can put in the chat box, what is the problem with all of this? Let me know, because I can see it straight away. What is the problem with this falling wedge breakout strategy since December 2022 to almost November, almost 11 months? What's the problem? Anyone? Anyone know? Anyone guess? Perhaps? I'll tell you what the problem is. I'll tell you exactly. The problem is you would have lost money here, 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 there, 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 there. You would have lost money 7 times. And yet, people will do that, lose their money, then just come back and do it on something else. Why is that happening? Well, the reason why that's happening is simple. The reason why it's happening is really, really simple. It's because this is not a long. You're buying a high price. You're buying at the end of the up move. This is not a sell because you're selling at the end of the fall. Okay? Or in other words, you're buying into resistance and you're selling into support. That never has made money. That never will make money. Okay, you can't make money doing that. You've already lost your money 7 times. Even if it falls now and you go, wow, I traded the breakout because I was short. You've lost money already. So it doesn't make a difference. That is not a sell. Yes, the price may fall through. There is every chance the price may fall through. But probability wise, it's far less likely than it is to rise. And the reason why is because these are buying areas. These are all buying areas. People have bought there before. They are places to buy. They are not places to sell. That is why breakouts are a myth. Patterns are a myth. People post them all the time. Oh, this is breaking out. This is a pattern. And it doesn't work, does it? Because if it did work, everyone would be absolutely stacked with millions of pounds, dollars, euros, whatever, and they'd be rich. But it doesn't work like that. You cannot simply do nice fairy lines as if you're 7 years old and you're drawing on your mum's wall or back of the door, and you're just picking these patterns. Doesn't work. Now, someone has said, so basically you wouldn't have traded since December last year. No, that's absolutely wrong. I've probably made 50, 60, 70% trading this in the last year because I'm short here, I'm short there, I'm short there, okay? And I'm long here. I was long there, I was long there, I was long there, I was long there, and I'm long here again. I was short there, okay? And I was short there, right? Now, if I long now and I'm wrong, I've made money 7 times. I'm considerably further in upside than I am in downside, and I'll be able to hedge my way out of this, as my members know. So this is probably, yeah, I know. Yeah, I mean, we're all, there's no stupid questions here, but I know that's not right. I've traded this for years. So breakout traders don't make money. Okay, you only know this is a breakout once it has broken out. It's too late. Once it's broken out, the price has come down. You are selling into the hands of the money makers. You are selling into the hands of the market makers who are there to pick all your losses up. That is why 90% of people lose money trading whatever in X amount of days. That's why all the brokers say so many people lose money trading. It's because all those the breakout and pattern traders make up the mass market of traders. That's why people make money, because there's all these people losing money, and then there's a small amount of people making money, and that is why I teach people how I trade. Because it's like a filter. Everyone who comes in to learn to trade comes in the filter like that, and it gets thinner and it gets thinner and it gets thinner, thinner to like 1% or less. And it's because this is easy. It's easy to draw lines. It's easy to chant that you're a breakout trader. It's easy to do that. So yeah, I mean, you'll find posts and videos littered all over the internet about how it's going to break out. It's lunacy. It doesn't work. Unfollow everyone who says that, okay? Because you'll lose money. You will lose money. If you don't believe me, why don't you just look at what I just drew you? Because you don't need to believe me. All you need to do is look at this, okay? If you sold at the highs every time, and if you bought at the highs and sold at the lows, you'll lose money. It doesn't work. Stop doing it today if you can do that. It just doesn't work. So another index market I like a lot is your S&P. I've got the E-mini futures market here, and I might tag this video why breakouts and patterns don't work. And I'll talk about it a bit more now. Again, if you were breaking out, then you're going to have problems trading the uptrends in between. But that is a really strong zone for long entries. Okay, you've got one there, and you've got one there, and here. There's various strong support levels at that point. Okay, so I would very much say that is where I would get long now, but short previously. And again, the same thing has happened. You've got the same as the UK 100, the Footsie. There's your trend line to the upside, roughly drawn. Okay, it's not terribly accurate, but somewhat like that. Okay, it's just basically showing you the market has gone up. And then along the top, you've got this trend line, or this flat horizontal line, if you like. Now again, what is the problem with buying here? The problem is it fell repeatedly. That's the problem, because it's not a long, it's a short, believe it or not. Now, if you're someone who thinks breakouts work and you think buying high works, you are right eventually. But you've lost all your money by then. You won't get to that point, okay? You've already lost everything. That's why people lose money, because of the variance structure of the markets. You're far more probable not to break out than you are to break out, okay? So you should have been long at all the lows. You should have been short at all the highs. Have you ever heard the term buy low and sell high? That is what makes markets work. People buy low, people who make money, and they sell high to the people who are losing money, because the losers in the market are getting a bad deal. They're buying at the top of the market. It's not a good idea. Don't believe me again? You don't have to. Look at the chart. It's all here. It's all there. Can you see it? Can you see how everything I'm circling goes in line with what I said, except for once, compared to 10 times or more? In fact, myself and my members would have been buying the whole way. It wasn't just 7 times, it was 100 times, 200 trades, and then you get one wrong. I mean, it's up to you how you'd rather do things. I prefer the way that works. So long S&P 4200 for me. I've done various YouTube videos lately. I was going to get onto the end. Sorry about that. Academy member has asked me that. Andrea, great to see you. I hope you're progressing well. I will go on the yens. Your question specifically, what's your view on yen sentiment? Well, if you load up practically any yen, you can see them all. I'll just flick through them. Where's my dollar yen? Dollar yens are probably the best. So at this point, you still have yen weakness because they're all rising. Okay, so naturally you can read through that and say to yourself, okay, well, the yen is still losing value, right? So you know that there's still yen weakness because the price is showing you that. Now, the only thing I would say within this is that because the price is stalling sideways like that, clearly it's not as strong as it was. Okay, so therefore the yen sentiment is mixed. And that's the case because if you look at news regarding the yen, they're very muted about what they're going to do about it. Okay, so it's likely that's why you've just had this sort of sideways movement because they're pending, right? Now, regardless of that, um, you would only find that this falls once the sentiment changes. Now, you don't know when it's going to change. You don't know when the Bank of Japan or whatever it is going to drag this down. Okay, you don't know when that's going to happen. So your job in that point is to short into what is upwards market sentiment. Okay, because once the sentiment changes, you'll then have the ability to enter and exit as the market starts to fall. Now, similarly to gold, because this market has rallied so much, you will need to drop your size and spread out your positions, because if something like this occurs, that's the only way to deal with it, right? The fact that it takes from February 2022 to October 2022 gives you 8 months to deal with this problem. Now, if you spreaded your shorts out and you traded long on these areas, you should be fine. You shouldn't have an issue because eventually the market falls like that. So within this, the yen sentiment, you still don't have strength for the yen, but I would say it looks like that may change. Nonetheless, it's still a technical short area because, like I was saying similarly before, that is the price you can reflect on. Clearly, that was a high price. Clearly, traders preferred it short. I actually did an editor's pick on that in October last year. You can view it on my profile where I called it short, and it just fell incredibly. I wouldn't be surprised if that happens again to some degree, but if you're trading it, I would likely short and I would spread out your entries. That is more or less how I would deal with all the yens. Swiss yen, I've done quite a few videos on this as well, by the way, but Swiss yen is the same. CAD yen, you can see they're all stumbling because they're unsure. It's uncertainty. If you wanted an accurate answer to the sentiment around the yen, it's uncertain. And you don't need to read the news too much to understand that. You just need to look at the candles. You can see that they're all very, very stalled. Okay? They're all going sideways. They don't know what they want to do, in other words. See that? So just trade it at technical value. Long when it's low, short when it's high. I'm long the Ors 200, I'm long the CAC 40 as well, for anyone who's wondering. And no, I'm not shorting the lows on either of them or any index. I'm not doing it because I'm not a breakout trader. Someone has asked for XRP. I will just do that because, and thanks for your comments as well in regards to it being helpful. It's like this again, because I did another big post on this and got tons of abuse for it. Right up here, I said, look, stop hoping it's going to go to the moon. Liquidate your positions. Don't buy up here because you're going to get absolutely cremated. And I was told, oh, he's ridiculous. Oh, that's unbelievable. How could he dare insult our crypto dreams? And suddenly, what happens? Well, comes down and suddenly the comments slow down, and then suddenly about here people are, and they come back for a little nibble every now and then when you get to about here, suddenly there's this desolate desert that appears and no one's saying anything. No one's talking about how they've just lost all their money or all their profits. And I don't say it light-heartedly, okay? That is a sell. It's not a buy. There is no breakout. You're not breaking out anywhere. That is a short, okay? You didn't break out. If you held your profits, you had nothing. You should have locked them in. But if you're holding profits, you're a buyer. If you're not exiting along, you are a buyer. You're buying, okay? Your bias is up. And if you hold on to it too long, like most traders who don't make money trading, your bias is going to be to the long side for an extended period of time. Okay, that's never good. So I think that covers a lot. Thank you to everyone who's come along, whether you're watching on YouTube or TradingView. If you're a member in here, I'm posting some members training today, some really key market lessons to give you consistency, or at least show you how I get consistency. A lot of people have pressed the boost. If you can tap that boost, it might be in the top right where my mouse is, it could be in the left. We might change the title about breakouts, but do press it. If you are dead serious about trading, you want to be profitable, you want to know how to make money long term, then get me on Discord or grab my free training underneath, because you'll get my contact there. Okay, the free training is underneath the YouTube video or the TradingView. Come and join the Discord, and it's all in there as well. There's tons and tons and tons of training you can have. So thanks so much for coming as well, everyone. Really appreciate it. I hope you've learned a lot, and I hope to see some serious traders on board today. If you are a member of mine, don't forget to check your email, because I'm going to send more posted videos in the members area exclusively to you. Okay, thanks for watching. Any questions, just let me know privately, guys, and I will do what I can. But mostly to people who are on board the academy. I'll see you in the next one. See you there, guys.